My name is Dontez Lindsay. I am the general manager of Ducks Trading LLC, as well as the lead trainer of Stockcraft. I'm not a financial advisor, nor a CPA, and the content I create is for entertainment and educational purposes only. I trade in my account, and everything I do is hypothetical in nature because it doesn't happen in your account. My experience with trading is not typical, nor does it guarantee that similar results will be obtained by you. I am merely sharing my opinion with no guarantee of gains or losses in investments. Remember, day trading can be extremely risky. You should be prepared to lose all the funds that you use for day trading. In particular, you should not fund day trading activities with retirement savings, student loans, second mortgages, emergency funds, funds set aside for purposes such as education or home ownership, or funds required to meet your living expenses. Further, certain evidence indicates that investments less than $50,000 will significantly impair the ability of a day trader to make a profit. Of course, an investment of $50,000 or more will no way guarantee a success. With that out of the way, let's get into the content. What's up, guys? Hey, yesterday we had a really bad CPI report, and yeah, the ticker I traded, AKRO, it didn't drop as much as I wanted. I'm upset now. Sad day. Other than that, I hope everybody else is doing okay. In the market right now, it kind of looks dead, honestly. I only have like 4 tickers up, and I've been checking things out for about an hour now. There's 3 tickers that are around $28. There's a 50-to-1 split for what is this called? ADTX. It's another biotech. There's been a lot of biotechs lately, and this biotech, it did a 50-to-1. So pretty much after the split, the float is at 1.1 right now, and before it was at 54, and a market cap of like 1.1 billion. So it's kind of in a similar situation to yesterday, but yesterday we had the CPI report come out, so I don't know if we're going to get as much volume. And there's also 3 other tickers that are up at like $25, or not 25, $28. So I don't know how that's going to affect in terms of all the volume funneling into one. Overall, I'll show you my trade review from yesterday, because we had some other plays show up too. So yesterday, first green day on NRBO, that was a reverse split, and which refreshed the history, so that makes it a first green day. It was also kind of a sympathy play to AKRO, which was also a first green day, and that was 100% gapper. It had a large cap, and I started doing a little more research on like Steven stuff, and then heard from Jimmy that large caps, they do have a I know you can like dip buy them when they get to like a certain point, and like especially if it like cuts in half, that's a really obvious like play to dip buy it. But above 200 million, someone mentioned it yesterday, it does take away a little bit of the odds in terms of the profit potential. So I got caught on the 30% area, aiming for the 50% area at 22, and it just never went down. So if you zoom in a little closely, you can see I made one trade, borrowed everything, took 2/3 out, put the other third in, and covered it for, I think it was like $1.20 loss, but I went in pretty big, so it was like a 1.5K loss. Now I got 2 day trades left. Other than that, there was also PXMD. Now we saw this one ran a few days back. I think it was like Thursday. This came in for another like double top, and that was that made it ideal. Before, it wasn't as ideal because it what was the ticker name? PXMD. That one's a micro float, and when it originally went up, it had a little bit less odds, but when it became a double top, the odds were actually there. And yeah, it actually gave a lot more than you expected. The previous day it went to 430. The day after that, I think it went past 4. I took it off the chart just so I didn't get any FOMO. But let's see. Yeah, so this one actually went to like 380. And then that midday bounce, that's what I'm talking about in terms of these micro floats. They've been giving you the stuff that you want. Now this was originally a bounce short, but again, it's micro float, so the odds were like brought a lot of fear. It did have an 80 million resistance and a clear 20% pullback with a double test at the top, with like 30 minutes in between. It's still pretty scary. But like this second day though, yeah, it didn't matter if it was a micro float. I would have went in on that if I really wanted to chase. I just didn't actually think it would go down like the 4. So I'm gonna make sure to track that. But other than that, again, we have 3 tickers that are around $28 today. You got NRBO, which went up to 60. This was the reverse split that, you know, reset all the history and then, you know, went flying. ADTX. Now this ADTX, the reason they did the reverse split was so they can meet the requirements for the NASDAQ, just staying above $1. I don't think this has the ability to run like $60 like NRBO, but NRBO by itself, it traded very little volume yesterday and it went up to like 60. And it was kind of a sympathy play, like very small amount to AKRO. But overall, ADTX, NRBO, and AKRO, they're all biotech. But the one with the largest cap is AKRO. So this one's going to take a while to crack. If you do anything on this, I feel like it's just going to move really slow. Like it was so slow yesterday holding this. I really wish I just gambled on NRBO using my normal like gap up statistics, because I actually could have made some bank. Like overall, about like 60% of whatever I put in. Because I wanted to go in around, I think it was like 62, like 370%. Yeah. Oh well. I went for safety. Now, where did the jack go? High interest rate, downtrending, gap up short. They don't die. I have 4 samples: NKTX, Dawn. I remember Dawn. I was just checking that out yesterday. AKRO. NXT. NKTX. Okay, I'm gonna make sure to put that in the trade review. I'm gonna have to review that. I looked at, was it, how does institutional ownership and like large cap, you know, affect the profit margin yesterday, because this didn't go to like past 25. I was upset. Dawn and AKRO. Institution. All right, so I checked out ADTX. Here's where all the float outstanding says, but we know this is now like at a 1.1 million for float, so it's a micro float. Since they did a 50-to-1 split. On the off chance that this does go to 60, I feel like it won't go to 60 alone, since there's other tickers like around the same price. And then the main thing is, even though it's not really connected, we had that CPI report come out yesterday, which I did get the email for in the morning and I saw, but I don't think I put too much like emphasis on how much it would hurt the sentiment of people. Oh, just so much FOMO. Okay. Oh yeah, BIAF. That's it's an IPO that came out about a week ago. Thought I had it out. It does have like a 15-12 million resistance, but you know, with IPOs, we have to wait for it becomes a multi-day runner. Now that's multiple green days with increasing volume. BIF, right? Yeah. At this point, you could go in there, but again, it's another like biotech, and I just don't know how that's gonna work out. Like, it's been dancing between like 30 and 40% for a minute, but there's other biotechs like coming out. Most of the time, if I'm going long on these, it's just on like a positive news winner, and when it's a micro float, I just wait for like obvious overextension, like 140 plus. Like, I start going back in my notes, and like there's a good like 20 or 30 tickers, and they're all healthcare sectors, and for the most part, I'm going in at like 140. Very early, or very little amounts of like under 100% or 100 under 120. Yeah, but more specifically for BIAF, I don't think you can use these resistances. Like these two. Like, I don't want to say you can't use them. You can use them. It's just, it's going to be a really light resistance. And so I wouldn't call it a bounce short if like this went up to 50%, which would be like, what, 6.4? Like 6.2.
Market is open.
I tried to get shares for this earlier. Again, it's a 1.1 million float, which is fine. I'm still trying to figure out the main difference between NRBO and ATX. Because like this one had a 900K for its float. This one had, okay, I think the main difference is I think their outstanding stayed the same. This is the one I saw, or they updated it. Yeah, this is the one I saw. Talking about pumps and shorts. Nah, I'm gonna start that OnlyFans. Who needs a YouTube streaming trading channel? Here it is. It's down here. Yeah. So it says the common stock will remain at 100 million. So we know the outstanding is the common issue shares plus like the shares that they hold in the treasury or like in the back end with investors and the inside people. And they said that's going to be reduced to 26 all the way to 0.9. What am I doing? Yeah, I remember. All in on AKRO. Let's go. They want. Would be kind of specific. Hard to die. That's legit. That's what it is. Doing something. Did you track late day bounce short? How does it work? I like CMRA yesterday. I didn't track CMRA yesterday, but late day bounce shorts. I don't have any problem with them if it's at least 60 million and above. It depends on how late day you're talking about. If we're talking like you got past the 50% after 2 o'clock, it depends on how much volume you had up to that point. But if you're talking before 2 o'clock, oh yeah, I'd go in. Because I see things as like rush hour time, and that's before like 2:40, but it's after the like 1:40 crack, and I feel like there's just like a big difference because like around like 3:30, that's where those like there's another kind of rush that comes in. I just feel like there's a fixed amount of money and it has to go somewhere. And if you have a bounce short, everyone's going to be thinking about, you know, trying to get a short on that. But once you get later in the day, they're going to be like, oh, the odds are in my favor to like squeeze this in the after hours. So I try to compare it to like a gap fill where, you know, you got those people that have been waiting on that consolidation for a minute, waiting for a chance to, you know, break the high a day from the morning. And, you know, after 2 o'clock, they're just like, this is my moment to shine. Okay, now this ADTX, just because, you know, it was at 40 cents before, I felt it would try to go to, it would like go down, but I was like not confident in terms of like why, other than just pure, this was below $1 before. Like I still can't say in like 1 or 2 sentences why this is going down. And I don't like that. Like it's on SSR. It's a micro float. It was under $1. The only thing different is yeah, I'm just not confident with that. I think it's mostly me not being familiar. Like I don't know. I don't know. There's just too much doubt for me to just blindly short that, because I don't have the stats for it. That's what it is. What's that doing? I kind of regret wearing this flannel. It's so hot. Yeah, flannel. All right. I heard Steven said late day bounce short lowers winning percentage a lot. So yeah, I've heard him say something like that. Let me go to my notes. I know I have something for like just general late day spikes, and you know, in general, late day spikes are harder to short, 50% edge loss. That's what I have in my like general shorting area. Squeezing on large caps, 30%. Oh, okay. Oh, these are squeeze percent. Liquidity stuff in it. Oh, I already read what I. Did you make money on NRBO yesterday? Didn't touch it. I was waiting for a consolidation and confirmation. The closest thing I got was that that perk to 40. So like this second one right here, I wanted to go in, but I was already in AKR at, was it AKRO at that point. Oh man, I really wish I just got on this one. So this was supposed to be the safe one. That's what I get for being safe. Who needs protection anyway? Okay, I'm done. All right. Did you make money on? Oh no, I already saw that. It just had a stock split 1 to 50 ADTX today. Yeah, it did. It's just going straight down. I don't know where it's gonna go though, because this is another one of those gaps that are artificial. Now it did go up like 30-40% because everyone saw the split, But that was another reason why I was hesitant on it. I'm just like, why did it go up? Like, if we're just specifically talking about like discount and what's the opposite of a discount again? And a bargain? Or no, that's the discount. Discount and like you just feel cheated in terms of the price. I couldn't fully find this is why it's going up, this is why it's going down. But originally I'm just like, okay, yeah, this is going down because it was below $1. But I couldn't just fully form an argument for me to just blindly short this. And so I just assumed it was going up because, you know, microfloat and biotech. But it also has competitive volume because there's other tickers in that like price range. So yeah, still don't know. I was waiting for NRBO being like the most volatile out of all of them, just being able to move on such little volume. I was expecting that one to go up. Now this one just dropping like a rock. I can kind of understand, but I don't know if I can repeat that because I can't tell how much it actually has to do with the other tickers like having pressure on it, or if it was just because everyone knows that it's trash and they're just like, it doesn't matter if you do your split, we're gonna go all the way back to 5, all the way back to 1. Yeah, you can see I didn't borrow anything. I'd rather just wait for the next what someone said it earlier, CMRA or BMXD, like a bounce short or a gap plus bounce, a resistant play. But I do make sure to track these kind of reverse splits. I was looking at them this morning, like my previous reverse splits, just trying to figure out if I traded them last time, or like what did they do. And it was another one of those, you know, reasons for me to doubt, because they didn't all do the same thing. I know Steven, he likes to look at the previous data and like the previous price action before the split, but overall he knows that the history and resistances are refreshed, but he still likes to look at like whether it was volatile and things before. Okay, now in RBO, I still think this is going to go up. Oh, it actually went to 23. It's kind of sneaky. I think I have it on, no, it's only on the 5-minute candle. Okay, so this is the stubborn one. Yeah, I just have to ingrain the ideal of, you know, larger cap, not just moving slow, but larger cap not dying as easy. Because I know with like slow grinds, like you remember from like the trading techniques, it's a lot easier to get slow grind on a larger cap. But I feel betrayed. Okay, I'm done. What am I doing? So AKRO was of some bounce short yesterday. That's news to me. There's no resistance on AKRO. I tracked it as a first day, a first red day. And I didn't track it as a gap up short because it didn't have consistent or individual resistance. It was a downtrending chart with a pop. Yeah, I think I said it earlier. I have a lot of biotechs that ran anywhere from like 120 to like 260. And yeah, the ones I mostly track were about like 140. Now look at this thing, it's still going down. Like, I don't have any specific statistics on like, oh, this artificially gapped, what is this, 50 times? So it's gonna go like to half the artificial spike point. So like if this went from, what is it, like 50 cents all the way up to like $30, are we supposed to expect this to go to like 15? What layers of like respected levels and support is it going to stop at? I have no clue. Right. And then I still don't understand if like having a really negative CPI report like has anything to do with this. Like there's just so many little things. I'm just confused. And it's on SSR and it's still moving like that. Oh no. BIAF and SPRC have resistance. Yeah, but BIAF, that's an IPO or recent IPO. This one, you know, the highest individual resistance you have here is like 12 and 16. If this does go up to the 50% mark at 6.3, 6.4 area, the max you'll have is like 20 million resistance. And this only had, I think it was like three in the pre-market. So yeah, this puts you at 30 million resistance on the estimate for the intraday. And it's already at 6 and we're not even 30 minutes in. So yeah, overall the estimate will put you past, or at least 1-to-1. No, a little bit less than 1-to-1. Then, or like, I can't confidently say like don't do it, because like I've seen less odds work and it's ridiculous. Yeah, but I know what you mean. It does have something. It's also a micro float. SPRC though, that one, oh, that's actually at the top right now. Okay, yeah, I like SPRC. Only thing I don't like about it is it's $1. But there we go. So it's currently at 130. Yeah, overall, this is it's not that bad. Yeah, like I'd rather use this one as a bounce short than BIAF. Like that resistance is like 66. Now this does have half. That's 30 million right now. Oh, look at that, it's going up. But I don't need this. I'm tired of this ticker. This one made me upset. The SPRC. There you go. So whenever you get like a ticker under like $3, you can see a lot of volume. So I consider 50 million pretty crowded. 30 million, I said you have to be like 4 and above for you to feel crowded there. So this one, it's not fully crowded yet. If it was like at 35 by this point, which is, yeah, you still got 10 minutes. Yeah, I still don't consider this like extremely crowded yet. Main thing is I want it crowded because then I can have like kind of a momentum shift into that resistance. But if there's like a gradual uptrend, a slow grind into that resistance, I wouldn't like that. I like this big push into it though. There's 66 million. That's just right above what I consider light resistance. Like 60 million is like the cutoff. It's almost getting into heavy resistance for me. Legit, the only thing that drives me away from this is that it's $1.50. And you know, we just saw a ticker do a 1-to-50 split to keep it from going under $1. Now, what do I look like gambling on $1 stock? Now, what I should have gambled on is just trusting my intuition again on ADTX instead of following my head. Only lessons I'm getting lately is it's you make more money gambling. Oh well. I could have studied more and realized that this will only go to a certain point. The main thing is I just shouldn't have went in like here. I definitely FOMO'd. I FOMO'd hard looking at NRBO, like, because I was ready to nuke it at like 70. And before that point, I was just like, I wanted the consolidation, but I FOMO'd. That's actually probably what happened. I FOMO'd a lot earlier than I should have, waiting for that consolidation here. But then I had this ticker up too, just in case it did like a double top or something. Yeah, the only place I should have attempted to trade on this was the front end. Okay, yeah, I have some type of insight now. What am I doing? NRBO isn't moving at all. It feels halted. It must have been a while ago. The volume on is 500K. And this isn't HKD. Like, it's 500K. Doesn't move you like $500. Moves you like apparently $5, which I still think that's pretty good. On some BS bull, not bounce short. Oh, okay. AKRO is on some, okay, BS. Okay, I thought it was bounce short. I was like, that's not a bounce short. Wouldn't there be historic resistance based on the split price? Yeah, that's I think that's what Steven starts looking at sometimes. But I have in my notes like several times he says, you know, anything that affects the supply, like reverse splits, they reset all history. So I just go with that. I think you probably saw it in the Kickstarter. Topher, he was given a webinar on you know, dilution and reverse splits, and you know, the whole cycle of like demand and when does it become expensive, when does it become like overbought and things like that. A lot of those are like relative. Now they all have their sweet spot, and I don't think I have enough statistics to remember that sweet spot. Well, I know Steven, he knows what he can get away with. I'm still like slightly trying to come up with something more concrete on ADTX. I'm just like, how far are you going to go and why? Like, there's just so many, like, I think it's this, I think it's that, but I want to be for sure why. Bro, every time I look at AKR, I just remember me yesterday in the gym. Oh, the AKR, it gave me some extra reps, some extra energy in the gym yesterday. I wore all red to match my account balance yesterday. Oh, it was bad. It was one of those days where like I felt so low that I was happy in the gym because everything made me feel, you know, the opposite. I'm just like, oh, I'm about to kill these weights today. That's why it's hard for me to wear this flannel. Getting too swole. Now, if I can get that wallet swole, and instead of getting those numbers up in the gym, get those numbers up on this winning percentage, you know, I'll be even happier. Now, I even have this note over here that says, oh, it's one of my jokes. Never mind. It's like, which one's gonna blow up first, my account or one of these videos? I'm like, oh, okay. SPRC 66 million resistant. Yeah, that's pretty tough. Again, I just don't like it because it's $1. You guys can go for it. Just remember the 50% point is where you're supposed to cover, but since it's $1, I just feel like there's a natural buying pressure because it's so cheap. Now we're almost at 10 minutes and it's at 35 million. I consider like 50 million by 1030 like crowded. And crowded's good if you have it like all at once. Okay, there's dust somewhere. I just don't know where. Hey D, I have my data collection, but I don't know well how to use it. Should I enter an average and risk in a standard deviation, or enter standard deviation and risk from there? So when it comes to like deviation, I think there is a ideal point you can aim for, but overall you want deviation from the trend. So it depends on like what you're tracking. If you're doing like a gap up short, you want the extension from the open. You also want the extension from the close. And you're going to track the average of that. And pretty much you're going to have like the average profit that you get. So you're just going to be tracking like 2 points pretty much. The top of the ticker for the maximum range created, and the bottom of the ticker for the maximum like profit that you can get. Everything else in between, that's more of just key points in the pattern to where it becomes like a different variation. But overall, I like to separate mine into, like, first there's just gappers, and then there's gappers that I actually want to focus on, like a very specific price action, like ones that didn't pull back half, ones that went minimum like 30% at the open, and like things like that. That's when it when it comes to like deviation on those, I just separate them by like market cap and float. Yeah, like hopefully that helps. I enter in average and risk. So like when it comes to risks for me, I feel like risks is going to be tailored to my overall account. Like there's a max loss that I want to have based off my goal. So if I want to make so if I have like a main thing is I don't want to risk 20% on any trade. So I usually go like 15 to 7%, and the ones that I risk 7% on, those are usually larger ideal size positions. But the ones that go like 15%, those are something like a gap up short, like 70% odds. It'd be the same thing with my longs, because like they're just overall a lot less odds there, and so I can allow more wiggle room, especially on micro floats, which need large swings. And like that's how I set my risk. Now you can track that in terms of so there's like special ways that Steven does it, but I don't like double down on those kind of methods, like his support thesis and resistance thesis and things like that, or the 5 candle thing. Yeah, but overall your max loss is going to be tailored to your personal comfort level and the specific situation and pattern that you're working with. But overall, any trade, I'd never try to risk more than 20% of the account. So if I have a 10K account, I never want to put in a trade that'll put me down like 2K and below. Just so you can have like 5 chances before you like blow up. Now that's also specific too, because if you have a low size account, you kind of want to be going in big so you can like have exponential growth, and then you do this thing where it's like safe trades plus like trades where you try to get the full meat of the move, and then trades where you're legit just trying to get wins, but you can go in a large amount because you know it's safe, like large price stock. But you also don't want them swinging like NRBO. You don't want them moving slow as like AKRO either. You want something like BBBY, where it's like massive volume, except you want to just get a tactical position and just like wait, like confirmation kind of thing. Oh, why do you hate dollars? What? What? Wait, why do you hate dollars? Get 1 million of them and you're a million, bro. You're a millionaire. Okay, is ARQQ a pre-market breakout or not enough volume? After BIAF pre-market breakout and bullish on float rotation, or in the resistance a problem? Or is the resistance a problem? Yeah, I didn't think about that. It could be a pre-market breakout since it has such little volume. So yeah, I'd consider. Yeah, and it was under 50% too. Yeah, this would be a setup for the pre-market breakout, but you have to make sure you fit the other criteria for like market cap and flow too. I do like that it's like a biotech, and you know it's pretty cheap. Like I wouldn't call it a pre-market breakout if it was like a $10 stock. BIF. Ooh, 11 million market cap and 1 million float. So 2 to 10 million is what we aim for. Just because we don't like mess with micro floats, because you could have like too many rotations and that mess up the natural liquidity flow that goes into the stock, because that's what really causes the breakout. You have to like push and then have enough of a pullback to let new people come in after people are trying to sell and take profits. And this market cap is definitely like paper thin, so you can definitely have a large run, like 100%. There's no peer review results. Do they really just, okay, they probably have other biotechs evaluating them. I was like, what does that mean? It's like, I feel triggered if they just made this news. They're like, oh yeah, I had my brother look at my research, he said it was cool. Okay. All right. So let me just bring up my ideal pre-market stuff. Pre-market breakout stuff. There you go. There's parabolic breakout. There's pre-market breakout. So it's supposed to be a first green day. Volume is supposed to be at least 3 million in the pre-market. This one, it might have had more. No, it had like 2 to 3. I think I remember that. It was only like 4 tickers up this morning. I feel like this is not what I remember. All right, what was the pre-market volume? Like, can I rewind my stream? Is that a thing? I don't even think I brought it up over here. If I put it here. Yeah, but main thing is, yeah, I can see this being a pre-market breakout. Now, it doesn't look as ideal as I want it to, in terms of I want this spike to be a little bit higher, like up here. Where are you? Yeah. Like, I want it to be like that. And then like the resistance that it hit was I think it was like 630. Now if you hit that in the pre-market, then came back down and consolidated and then broke that, then I feel like it'd have been easier for you to have that breakout, because we want to see that it has the ability to run in the pre-market. And like with this, yeah, you can kind of say this is the start of the breakout, but it's really I think I could just pull up an example of what I'm talking about, because I have these little price action things that just give odds, and they can been confirmed by Steven. Most are too eager to trade. Patience is the key. Blah, blah, blah. Breaking the pre-market high during intraday equals higher odds. Spike into consolidation under the breakout equal higher odds. Spike into consolidation. Spike under the consolidation. Oh, spike into the consolidation. Okay. Yeah. Not that one. Main thing is we wanted to get a 5 to 10% away from the potential breakout area. But I want to see a breakout in the pre-market before I start to see it in the intraday. Lower high, right? Lower. Yeah, but main thing is it meets the criteria in terms of the float and market cap. It's under 20, it's under 100 for market cap and under 20 for float. I like it just being a biotech. It doesn't fit into the first green day because it has those resistances, but it's also an IPO, so I can consider those resistances almost like a first green day. And it was also under 50% push, like before the intraday, which is another, bullish thing. It's not a heavily priced stock. There was, no consistent resistance. It's IPO. No warrants. No, it'd be better if it had like a contract winner, or earnings winner, a merger, like other positive news. I don't know how much peer review has in terms of like moving this stock. So I can't really say it has a solid catalyst or a news winner. But I can definitely see how you would call this a pre-market breakout. I'm really trying to find something to roast this though, because it definitely doesn't look like it's going to go to 100%. $25 million volume. Yeah, it's not crowded either. What was the pre-market volume? Like if it was like 3, like 3 to 5, it'd almost be ideal. With the resistance, at least. Historic double bottoms, double bottom. Yeah. Probably up there. Yeah, so if it goes back up, it could break that. I don't know how having such a widespread light resistance will actually affect it. Even if it is like, you know, IPO, I feel like that would actually take away some of the odds for like the pre-market breakout without a strong news catalyst. Now, out of 5 stars, I give it a 2. Yeah, 2. I could definitely be picky with this, but I'd still gamble it. But what am I doing? I lost track of the chat again. There it is. Bound for why do you hate dollars? Yeah, it's a BIAF. It's definitely bullish on the float rotations, so you will have buyer insufficiency pretty fast. So that's why you want like 2 million, even like 3 million for the float. Like it's definitely not ideal. In the resistance, it is a problem, but it's not like the biggest problem. BIAF pushing. Yeah. Does Steven ever do some stupid trades when he doesn't think anymore anyone is watching, like a fat kid sneaking Hostess cupcakes? Yeah, that's where the discipline comes in. There's always trades that he's testing, but in terms of like who's watching, the person that matters to him most that's watching is like himself. Because like he's at the top. If anyone else like gives him criticism, like whether it be good or bad, it kind of hurts his like character. So that's why you kind of have to leave him alone for the most part. And like when you ask for help, you can't give too much like this is what I think this is, because it just clouds his judgment. And then like, you know, he's dealing with like millions at a time, so he has to be very like strong with why he's going in and like what he thinks this is. It's like that doubt, it starts to spread. But yeah, he does have trades where he knows the right thing to do, but he'll still do the wrong thing. But he'll do that with like a lot smaller size. I want a cupcake now. Okay, but bless you. As fun as it to go ham, I'm boring these days. That's good trading. Good trading is supposed to be boring. You're not supposed to get any dopamine from this. Looking at the chart, it's a trap. Like you get dopamine from trading. If you're not focusing hard enough to fall asleep, or you know, clench your butt cheeks like hard enough to like I don't know, I can go so many ways with this, but boring trading is good trading. That's how you know you studied enough to where you're just letting the odds play out like a casino. Like you don't see them going to every table just like, hey, you cheating, like, hey, you're not gonna win this dice roll right here. They're playing the overall odds in the year, not that specific day. The part where you go ham is just those ideal setups where you like the odds are in your favor and it's a part of your overall strategy to reach that number that you're trying to reach. Now keeping that in mind, whenever you focus on the money, things get a little clouded or complicated. But I'm still having so much FOMO for not just blindly going in on this ADTX. And then in RBO just going down another $8. Like, why? I know a lot of people just probably made money on these two. I'm just sitting here with 2 more day trades, and it probably won't even be a play or something like next 2-3 days, potentially. I'm tired of wiring money to TZ. Maybe I should learn how to trade before I go broke. Is what I'm about now. Yeah. Learning how to trade and then executing it properly. It'll definitely take you somewhere. 6.42 million. Oh, that was the current volume. There's no way that was the pre-market volume. No way. Yeah, no way. Double. I do remember something being up that much, but I don't think it was BIAF. If it was, yeah, this is not a pre-market bounce short or pre-market breakout. So are you and Steven actually okay with risking 10 to 15% on a single trade? Yeah. So the thing is, you can split that like 10 to 15% into like 1 or 2 trades. Like your attempts on a trade. Like you get past 2 attempts, you kind of get emotionally attached or attacked by the stock. So when I say like never go above 20%, you could be risking like 6% or 5%, like 2 or 3 times. Just make sure the overall collective losses from those is under 20%. Punk Angel, haha. I know if I had the account, I'd have like special degen days just for fun, especially with size. Yeah, if I had a huge account, I definitely have some play money on the side. Like if I got $1 million account, I'd just be like, okay, I'm gonna keep this 150K for those days where I just want to bully people in the like $2, $3 stocks, or just buy the dip on something ridiculous and just see if I double my money. Now there's always going to be like your core strategy and technique, and then like you do what makes you money, and then there's always going to be something you want to keep you engaged and in a positive relationship with the stock market, and like, you know, keep you in tune with the rhythm. Now you have to make a fine line between like, you know, what makes you money versus gambling. Like if you try to cross those, that's where you start losing real money. What's that? A stock operator, reminiscence of a stock operator. They talked about it with the main character saying he used to make money in the bucket shops, and then when he went to Wall Street, it was different. And then he was saying that eventually he got to a point where he started losing millions because he forgot what made him money. It was the same thing. And like, it was the same thing in trading in the zone and like two other books I've read, and from Steven and a few other things. Yeah, they all kind of say the stuff. Shoot, I've felt that a little bit when I went into options. That's why it's always like good to have a quality, discipline, slow approach when it comes to understanding like where your success comes from, because like quick success builds your ego, but slow success builds your discipline. And like that discipline is going to make you money. Those good habits are going to make you money. But you can also be emotional and ego trading too. But you're not supposed to have fun with this. It's all to make money at the end of the day. But you can have fun. Now, I'm not having a lot of fun just watching this ADTX just go to $16 and imagining the potential. I probably would have covered this at like 30%, but like I can see I could have got 50% on this though. And I'm really upset about that. Mostly just because I still can't tell why it's going down. Like, does this have anything to do with like the negative sentiment in the market because of the CPI and like the other stuff happening? Or is it legit just because it was a reverse split that was originally $1 and they're just like, we don't care if you went up to 30 artificially, we're gonna bring you right back down? Because if that's the case, I'm gonna blindly short every one of these at like 5 a.m. in the future. I'm gonna ask Steven about it later. Because at that point, you know, if this has like 1.1 million float, and you do get lucky enough to like get some, because there's still shares. Like, that was another reason I thought about it earlier, because there's 2 cents. Like, there's absolutely no squeezes, no covering. It's a biotech. I'm upset. Oh well. I keep going into my manic phase. Now, I know if I had the account. Oh, wrong question. How long have you been trading with ducks, and how your trading has changed since then? So we started in 2014 during the summer, and when we first started, it was it was me just gambling, going to a half-price bookstore with him, reading several half-price books, and just learning like basic chartings, doji candle, box and whisker, like all these like strategies. Then we started with pen and paper for a bit, a lot of pen and paper. About like a month later, we opened up an account. I was in pink sheets because like I put in a lot less than he did, and yeah, like I would get a lot of wins, but then I didn't understand what liquidity was. Eventually he got into like got into a program, understood like more basics, shared the information with me, and then we started making a little money. I went to college and like kind of dropped a lot of the stuff and only came back during the summers. And like while I'm at college and then he's at college and then also at like doing stocks, I was in campus life and several leadership positions and stuff, so I couldn't do as much. But overall, I went from being like barely profitable to just being like a philosopher or something. Like I didn't actually get into trading or like the pressures of trading until last year. But everything before that point, I was just surrounded by trading. And I did have like little accounts like what do you call that? It was Interactive Broker, TD Ameritrade, and another one. But like the trades I would do, they would just be either following Steven or like borderline gambling. Like I just had so many, it wasn't gambling. It was more of I was following way too many gurus, like way too many people's advice. And some of those people, they would be just full of it, just straight full of it. And yeah, I just had way too many bad habits or strategies I was trying to focus on. I like legit had no focus. Yeah, but now, especially after last year, I just feel like I've been a lot more efficient. Like I know what makes me money. I know how much money can be made on like each pattern. In terms of like, what was it, psychology and everything? I understood like why a stock went up, why it went down, like the institutional side versus like the investor side. Overall efficiency and how much you're supposed to make per year, and then how to make that repeatable, and how do you shift with the market when it changes. Like, so yeah, overall efficiency. That's how I've changed like since then. Back then it was more of I would only focus on the money, and I would focus on the money like later it was because I saw Steven had the money, but before that It was more of we saw other people online had the money. And then Steven, he has a natural desire for finding balance and efficiency and stuff. Me, I have a natural balance for finding like fun and dopamine and impatient things like that. So it's very conflicting, but like the more you know about it, the more you can be aware of what it feels like when you stray off the right path. So that's where the efficiency part comes in. So, yeah, that's how it changed. AKRO would have broke you yesterday though. I got a small position yesterday morning at 25.5, got out at 25, and it went up to 30. I've been really careful with my trades, like almost too careful. Like I really wanted this to squeeze a bit so I could just, you know, be on top of short sellers. I think I could have got out around like 25 on this. But in terms of you going in at 25 and then getting squeezed up to 30, or you doing double from the bottom, and so you went in at 100%. The only reason I wanted to go a little higher was because I was using my micro, like my gapping statistics. Again, I consider this like a first green day, and so I wouldn't treat it like a gap up short, like just blindly going in anything above 70% and then getting like all the confidence in the world at like 100%. But I could definitely see you led with your risk management. Now, if you held a whole $5, that's not cool. Like with $20 stocks, I think like $2, maybe $3 max. That's where it's at in terms of like risk, unless you have something small and you can let it swing like that. But this shouldn't be swinging like that in the first place. That's just me. All right, guys, it's 10:30. I'm gonna head out. I'm referring to the blind shorting in the pre-market. Oh, okay. Yeah, like, yeah, blind short in the pre-market. I don't recommend it. I have to not. It's really hard getting up in the morning to look at stocks. I have to do a whole routine to make sure I'm fully awake and have a rule to where I don't touch anything, even if there is something I want to, just so I don't get the pre-market FOMO, especially with multi-day runners. Like I have to come up with a full, not checklist, but it's something similar to it, just so I don't do that. All right, but I'm heading out, guys. Weird. Peace.